Welcome, everybody. This is the Thursday evening Viper trading webinar. If you're here to learn about trading futures markets using the Viper tools, you're absolutely in the right place. First, we got to get our disclaimer out of the way. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. So what I'm going to do is this. I'm going to start off with ES at the open this morning because Bill W here was asking about that opening trade. And so let's talk about it. And I think it's going to illustrate many things for you to consider, especially right around the open. So let's get over to screen one and start off with that. Now, when you looked at the market, this here. So some of you are brand new, and we have some visitors. If you're visiting us this week, welcome to you too. And let me get you oriented so you know what you're looking at here. I am in California, so everything on this chart is Pacific time. So translate that to your local time zone. Midnight Pacific is right here, going into this morning, Thursday the 5th here in the States, right? Okay, midnight Pacific right there. So most of you know, of course, that from the close of the prior day, which is over here, to midnight is what's called the Asian trading session. So all the big banks in Singapore, Hong Kong, and what have you are trading. Well, they're trading all kinds of markets, of course, just like anybody else, but they all actively trade futures as well. And you can see that in the early part of the Asian session, it was choppy. And then we went into what's called the European trading session here, starting at midnight, like such, where obviously you can see that we went into an uptrend on the equities and ES. So part of the topic, or the main topic tonight, is quickly spot the trend and then look for trade setups. So what I'm going to do is this, and the way I'm going to approach it is I'm going to do like such. So here, one of the things, and let me back up. So we are connected to a data feed to our broker. This is a rhythmic data feed. These are 4 range bar charts. So each bar is 4 ticks. The indicators on the chart from Viper are the background colors, the bar colors, the predictors, real-time support and resistance, the power meters, which are darkened out right now. They'll load shortly. The alerts, these are great. When you're in an uptrend, you turn the long alerts on, long midband, long minimum criteria, long phantom. And then, of course, when you are in a downtrend, you turn on the short alerts. And what this will do, I'm not going to turn them on because I want everybody to try to learn the system without the alerts, because the alerts will flash bars when a trade is happening, and it helps a lot. But I want you to learn to see them without the alerts, and then the alerts can sort of reinforce what you've already learned. So we are and of course you have the bands. The thick band in the middle is called the mid band, of course, and you have a total of 8 bands with 4 below it and 4 above it. The other items on this chart that are part of our Viper indicators are the line 2 at the top of band 2, the thin red line down here, and then of course you see the thin green line is called line 6 at the top of what is band 6 up here. Okay? Now I have added 2 things that you don't see in the room. I like to know where these levels are. I think it helps me visualize when markets get near a high or a low or an open. So I have added the current day open, high, low. This is straight out of the Ninja indicator package. We did not create this. And it's the open of the market right here from yesterday is the thin dashed black line right here. That just continues on until there's another open, which would have been at the close, after the close today. And then the dashed blue line signifies the high of the trading session. So you can see that when the market starts to go up, it pushes through the blue line like such, right? Not complicated. Like I said, I don't really use it too much for trading other than targets or seeing if we're getting fresh highs or lows. And likewise, the dashed white line at the bottom of this chart down here represents the low of the trading session. Now, the other thing I've added here, and I find it somewhat helpful, here again, it's not really, related to my trade entries or exits. It's just something I kind of look at, is the volume up down, which is shown over here. That's just straight up out of the Ninja indicators. Just load that on there if you want. If you find it confusing to add those, don't add them. Our charts are perfectly fine with just the Viper indicators. So what we like to do is we are what you call retracement traders in a trend. So let me explain what that means. Let's look at an example of an uptrending market. And then I'll, after I get this initial explanation finished, we'll snap forward to ES right at the open and talk about how we handled it. And then we'll, talk about how you can handle it tomorrow morning too. So when we say retracement traders, what we're referring to is that when a market starts to go into a trend, up or down, the initial part of the trend is what's called the thrust. And what happens in the thrust is that the background, in the case of an uptrend, will turn green. You'll predominantly see blue bars on the chart, maybe blue and some yellow. And when the uptrend starts to accelerate, you will see the mid band and all the bands starting to move up like stair steps over here. So this is obviously an example of an uptrend. So let's talk about trade entries. I think in the beginning, as you learn the system and you start to try to come out of sim, maybe set up a one-up or a top step trader evaluation account to get some funding. You can trade with micros. Those are only a tenth. So a tick on ES is $12.50. There's 4 ticks per point. So it's $50 per point, $12.50 a tick. So a micro is 1/10 of that. So it's $1.25. It's an easy, quick way to learn. You get the feeling like you're trading live, and you are, because the micros are money. But you don't have the risk of getting slammed a couple $100 here and there and then feeling bad because you're down. You might lose, 10, 15, $20 in a session if you get it wrong. So it's a good way to go. Now, right in here, you can have what's called sideways to up and sideways to down. And a good example of this would be right here. This area right in here is sideways to up. Now, pop quiz to make sure everybody's awake. Make sure you're awake. Pop quiz, 5 seconds. In this rectangle that I have drawn here, what type of trades would you take only? Would they be L long or S short? 5 seconds on the clock. Inside of this rectangle, L long, S short. 4 seconds. 3 seconds. You should instantly, what we want to do with these exercises is we want to get you to look at a chart and bango, you instantly know what to do. 2 seconds, long or short, L or S. Very simple question. 1 second. Time is up. So when we say sideways to up, what we are referring to is, sure, you're in a range. You can clearly see you're in a range. There's no question about it. You see the range, right? And the support is here just under the midband, and the resistance is up here. Okay, let's quickly evaluate the size of the range. This is very easy to do. You come down here at the bottom, and you're around 01-ish for support, and you're up here at 750. Let's call it 7 even as resistance. So that's 6 times 4 is 24 ticks. So based on our rules, if you know them, a yes or no question, is this range tradable? Yes or no? While you're answering that, I'll give you the answer to the first question. So still 5 seconds on the clock. I'll give you the answer, and then we'll follow it up with this. So there's 24 ticks. 24 ticks. So you're answering that one next with a yes or a no. Tradable yes or no. And the correct answer to the first question was long only. Yes. Long only. long only in sideways to up conditions, which is what you have right here. And the answer for the second question is yes. And for those of you that are new, it's really simple criteria. It's just if you're between 20 and 25 ticks, that's the minimum acceptable range to trade a range, 20 to 25 ticks. And so you're at 24, and that is acceptable. So when we talk about retracement trading, what we're saying, to be specific, is that in the case of the uptrend, the thrusting part of the move is up, obviously, because it's an uptrend. And so the pullback or retracement part of it is down. So that would be this part of the move, right? Now, in this case here, I'm going to go ahead and put a yellow line at the bottom, or blue, or whatever that turns out to be there. Yeah, blue, kind of right down there. And Gary does this all the time. You can do it yourself. In fact, let me make it yellow by default. I used to have it yellow. I don't know why it got changed. It shows up a little better on the chart. It's a little more easier to see. Where the heck is the yellow on here? There we go. Okay, let's set that as default. And let's put another one at the top. So we see the range very clearly here. Now, what we're talking about is that you are buying support on retracements in the case of the uptrend. Now, there's several ways to get into these trades, okay? You can use limit orders. You can use market orders. You can use the object trader tool and use any one of the various objects inside the tool. A lot of what you hear is boxing. So here's an example of a box trade at a midband right here, long. See it? That's a long trade right there. Here's another examples of long trades at support. Right in here, all these right here are all long trade entries. Okay, so when you pop out of the box, you get long. Pop out of the box, you get long. Pop out of the box, you get long. In the case of these long trade entries, your initial stop is placed usually 10 to 12 ticks down from where you're filled, so that would be down in here somewhere. And then, of course, you can see your target's going to be here. Now, you're not going to put your target in a range right on the resistance itself. You're going to fade it. So when we say fade it, you're going to come at least 3 or 4 or 5 ticks inside of where the top of the trading range is. And so essentially your trade is this. A lot of people say, well, why can't I just get 24 ticks? Well, it doesn't work like that. You got slippage, you got commission, you've got, you got to get filled. You get it filled on one of these bars, whether it's a limit order or box order from OT. And so essentially inside of this box, the trade is actually from here to here. So a good way to think of it is you're scalping inside the range. So let's look at how many ticks you get inside of 24 tick range. How many do you actually profit? How many ticks? Well, let's look. If you got filled here, that's 0350-ish. And you got out, say, up here, that's 5 3/4. So 3 is 1.75. Is that right? 7 ticks? Yeah. So it's not surprising that inside of a 20-24 tick range, you may only net about 7 or 8 or 9 ticks, 10 if you're lucky, because of the fact that you're fading the bottom to get in, you're fading the top to get out. Now, is there another way to do it? Yeah, of course. You could put buy limit orders down here, right in this area right here, and get filled down here. Now, if you do that, in case it flips on you, you keep a super tight stop on that. No loose. Right under here. So in other words, as that market is retracing, let's say hypothetically you were an early bird this day and you were up at 4:30 in the morning, my time, 7:30 Eastern, and the market was up here and you'd just gotten out of a long trade from over here somewhere, and you see it retracing. You might say to me, well, can I get a better entry, Charles? Could I go ahead and put a buy limit order down here around support? And the answer is, of course, yes. And can I go a little closer to the top? Do I have to go 5 ticks to fade it? No. You can go right up as tight as you want. Go 2 or 3 ticks underneath it. Now, in this case, the size of your range trade would be more like that. So you're looking at entries down around 01 3/4, 02, and you're getting out up here at 0650. 4.5 times 4 is 16, 18 ticks. So you doubled the profitability of your trade. But there's more risk. The risk is that you get filled on here and it flops on you and you stop out. So it's something you're going to have to experiment. I really like ES for range-bound trading. A lot of traders, how many of you, show of hands, put L for like ranges and L not like? How many of you like ranges? L for like. I love ranges. Give me a range all day long and I'll trade that pup till I make some money. And L, you avoid them like the plague. You just don't like ranges for whatever reason. Maybe you got beat up trading ranges. You can't see the entry point. Whatever the reason is. Yeah, not a lot of no's. That's what I thought. A lot of people don't like ranges. I'll tell you one thing. If you were going to learn how to trade ranges, ES would be a good go-to instrument to learn on. It really would be. It really is. It's one of the few instruments that sets up these support and resistance levels and then respects them pretty well. You try to do something like this on NASDAQ or the Russell or sometimes YM, you can get your keister handed to you and it can slop you all around, where ES is pretty straightforward. All right, so does everybody see how we handle a range in an uptrend? Everybody see that? I see some of you like ranges, some of you don't. Especially if you're going to trade ES, you're going to have to try to figure out how to get range trading into your toolbox, your trading repertoire, if you will. It really should have that in there, because otherwise you're going to miss probably at least half of the trades that's set up on ES. So the point I'm trying to leave you with here is that when you have an upper range that is sitting just above the midband, as you see here, it's perfectly acceptable to trade that, taking long trades only. Okay? All right, let's move forward. And now that you know that you're taking long trades in this uptrend, let's do a little exercise together. And you all know that one of the go-to trades for us, especially as you're learning, if you want to learn one trade and get really good at it, it would be a mid-band trade. Now, some of you that are new, let's talk about what a mid-band trade is. And I'm going to focus mainly on those today. We have the minimum criteria. We have the deep retracements. The range in CL can be choppy too, Giuseppe. Yeah, I'll show. I'm looking at a crude chart right now on another screen. It was range bound since about 10:30 this morning, and I'll show that. Not as clean. ES is the king of ranges. All right, so the definition of a mid-band trade, as we call out in the room all the time, is over here. When the bars enter the band directly above the midband, when the bars sit on the midband itself, like such, if they do, as they did here and here and here, or if they come to they could dip slightly below it, as you see here and here, into the band directly below that. So here are 2 or 3 good examples of mid-band trades right here. The bars are right on the mid-band, right? Here they're underneath of it, and here some of them are above it, and some are below it, and some are right on it. These are all what you call mid-band trades. So in an uptrend, when the bars get close to the mid-band, many times they will turn yellow. Now don't let that freak you out. That's not a trend change. Okay? That's not a trend change. That's just the algorithm for the bar colors. That's all that is. Now, I'm going to, based on your current knowledge, I'm going to reconstruct this particular day, which was, I think, yesterday, early morning. And when you think you see a long trade set up, you type in the letter L. Okay? Now, we're going to start at 657 and move forward. Are you ready? Here we go. Looking for mid-band only long trades on ES. Mid-band long trades on ES. Okay, now we're at 706, 718, 724, 730. Let me make the bars a little bit bigger for you there. 731. Remember, when you see a mid-band long on ES, you're going to just simply type in the letter L. That's all you got to do. Meaning that you acknowledge the fact that you see a mid-band long trade entry. Okay, 733, 734, 744. Okay, I'm going to stop it there. Almost all of you, and I want to give you a total kudos and a gold star for this, almost all of you typed in L's when you saw these bars form right here, and that was correct. Yes. So time-wise, that would have been, in this particular morning, somewhere right around, 7:30, 7:27, 7:31-ish. You got long. Good. So you're seeing them. Now, let's talk about the looking ahead aspect. Because I think where we have found over the years that a lot of traders sometimes struggle is seeing, it's easy to see it now, even though I'm advancing it and reconstructing real time. But when the bars are coming at you, it's hard to sometimes get comfortable with figuring out what's the pink dash line, Giuseppe? You mean like these here? That's the swing high lows, swing high low indicator. Yeah, these lines right here. These dashes are the high. In this particular case, it was breaking the highs of the session with this move right here. So, for instance, in the room, you might hear something like this. Let's say hypothetically, we got into a long trade down here somewhere, maybe at the open. This was right at the open. I think I took this trade, as I recall, right here. We had a very nice move up, all the way up, and we're getting out of it. We're stopping out up here. Okay. Now, when the market is at 1750, yeah, this was the other day. Remember, I wanted to get 1950, and it couldn't break that. Remember? I remember this morning. Remember, I wanted 1950. I wanted 20, and I was fading it, and it just couldn't clear that. Remember? Now, if somebody says, if ES pulls anywhere down around 1150 and bounces, I'm going to buy that. What does that mean? Well, the market's up here. At the time that statement came out, in fact, I remember exactly saying that in the live room. What does that mean? Why? I mean, come on, Charles, what are you talking about? The bars are up here. What am I doing? When I say that to everybody in the room, what am I saying to you? What am I projecting forward that hasn't happened yet? So it's kind of there was a saying that anticipate to participate. We're looking forward to plan ahead, if you will, on what we're going to do if the market does what we want it to do. All right, let me help you out a little bit. Tell me what this number is right here. What is that? What is that number? What are these numbers right here? What is that? 1150. In fact, as I recall, at the time, Gary had a line sitting at 1110. Anybody remember that? Or was it 1120? Something like that. Somewhere right in here, there was a line. Gary put a line in here where there was a prior swing over here. See it? So what I'm trying to share with you is how I look forward to anticipate where a trade entry might be. If you just took the long trade here, and it ran from, 203 all the way up to 17, that's 14 handles. That's 7 bones a lot, 2 contracts is $1,400. It's quite possible that this long trade would have made your goal for the day, and you would have been done. But let's say you aren't. Or let's say you missed it, or maybe you only got part of it, and you still want to trade. So when you're looking at where a market is, you have to anticipate where it might go. And then once you identify that, in this case it's right around the midband, where this prior swing was, and we put a line there, and you should put one on your chart too. So when we call out levels and Gary puts lines on charts, you have to realize that, for instance, when I'm trading on my computer here, I'm doing the same thing. I'm putting lines, I'm looking where I'm getting in, and I'm sharing those levels with you. Right? That's why we do that. Now, the tricky part is this. Let me explain the tricky part. So it's not enough to just know that you're wanting to get a pullback from the level at 1750 back into here. Okay, now I just shared that with you. Now you can do the same thing on your charts. When you're in an uptrend with whatever market you're trading, you want to see the market normally pull back somewhere into this area right here to bounce to get along. That's true on crude. It's true on NASDAQ. It's true on YM. It doesn't matter what you're trading. That is the goal in an uptrend. You're going to buy support on a bounce at the midband. Now, here's the tricky part. Sometimes they go a little more shallow than this. Sometimes they go deeper, as they did over here. Sometimes they go way deeper down into here, and sometimes they barely touch it. So that's the tricky part. The tricky part is knowing the area to anticipate, what type of trade you're going to take. In this case, it's a long, right? And watch the bars as they come into that area, like such. Okay, you see them? Now, we might have been thinking, so what am I talking about? Let me explain. We might have been thinking that it wants to come to here, say 11, 11 and a quarter, 1150, but the wicks of these candles, did they get there? Here, let me show you what I'm talking about here. Did the wicks of these candles touch where we wanted them to? Right here and here. No, they didn't. They came close, but they didn't. So this is the secret sauce. Okay? This is the sizzle in the steak. This is the piece you have to get down and get it down good. Because this is where the rubber meets the road. And this right here, learning this piece is going to make you money. Right there. That right there. Learning that. Now let me blow this up and explain it to you. When we begin a retracement on a pullback, what from in an uptrend, so the pullback by definition is down. And what direction are the bars primarily closing? Are they closing up or down? In a retracement, like such, like that, like all these right here. Are the bars closing mainly up or down in a retracement in an uptrend? Of course, it's the reverse in a downtrend, right? They close. What direction are these bars primarily closing? Right here that I'm pointing at with this little pointer thing here. Down. How do we know when the bars are done closing down and that we're in the opportunity zone to take a trade and we want to get long? I'm going to do it this way so you can visualize this. Would it be bar A here? Call this one bar A. Bar B. Bar C. Or bar D. A, B, C, or D. Which one of those four bars are entry bars in our opportunity zone just above the midband? Which one of the four bars is telling you that the retracement has exhausted itself? We're starting to close up now, and we're getting ready to resume the uptrend. Type in whatever letters you think are appropriate. I'll give you 3 more seconds. 3 more seconds to tell the team, cast your vote on which bars are the appropriate bars to look to enter. that the reversal retracement in the opportunity zone above the midband has exhausted itself. And now the uptrend is ready to resume. Man, this thing drives me nuts. I love this malware premium. By the way, I recommend everybody get this. This is great. This stuff is great. Real-time malware bites. All right, let me help you out. Which one of the bars are now closing up? A, B, C, or D? Which ones are closing up? Well, A looks like down to me, so B, yeah, that's up. Okay, so B would be one. C, that's kind of not really closing up or down. D. So the correct answers were B and D. B and D. Now, bonus points for anybody who can tell the team what other thing on this chart is showing selling exhaustion. What other thing on the chart is showing that the sellers have exhausted themselves? Staring right at you. I'll give you 4 seconds. What other thing on this chart is telling you that the selling has exhausted itself? And now buying can resume. Anybody? Let me see if I can help you out a little bit. What might that be? Well, let's take a look at it. Looks to me like 12,500 sell contracts came through on that bar right there. What might that be? Selling exhaustion. Yeah, it's 12,500 sell contracts came in on that bar right there. Now, what are we starting to see over here to the right? Over here. How about these right here? So you're starting to see why I look at this. Right? Buying. Resumption of buying. So in the room, for instance, when I say things like, it looks like the buying is resuming and the selling has exhausted itself, that's what I'm looking at. If you're ever wondering what I'm looking at, that's exactly what I'm looking at. I'm looking at the average volume for these bars appears to be somewhere right around 5,000 contracts, right? So you get this, in fact, when it's going up, you can see it's doing exactly the opposite right here. See the acceleration of buying right here? See it? And then notice you get some red bars, so this pullback is profit taking. So in other words, think of it this way. All the big boys who are running algorithms at the banks, all the big banks and folks who are running scripts that are buying and selling thousands of contracts, what's happening is they're buying from lower levels, and now they've got to take their profits. And so the profit taking is this. The opposite would be true in the case of a downtrend, right? Well, the way I look at it is this. In an uptrend, when I see selling like this, in my view, on the case of the red bars right there, that is just profit taking from market participants who are long from maybe all the way down in here somewhere. See how if you just look at the predominant color of the bars, it's blue when you're going up? Like right in here? Yeah, sure, there's some red ones in there, but mostly they're blue. So in an uptrend, then when I see the red, that's profit taking. Now, if you get a situation where a support level is broken and you see a huge amount of sell contracts come in, then that could be possibly a trend reversal, and now you're doing the reverse. Now it's selling, and then you would get blue bars, and we'll look at that. And that's short covering. Like I said, you don't have to look at that. You know, if you find that confusing, it's just another little thing that I look at. You know, and if it doesn't help you, then don't even put it on there. Okay, but that's what that is. So, you know, you got to really find an instrument that you like, find a combination of these bars. I like ES because it's very slow and methodical. It doesn't move very fast. I can take my time to think about what I'm going to do, where I'm going to do it. It normally comes really close. I have a lot of experience. I have a lot of chart time with ES. I kind of have a feel for when it's behaving itself. In the uptrend, I'm looking to get long. I'm finding support levels, and I'm buying it. You put limit orders there. You can put a market order in there. You can put an object trader box, however you want to get in. Okay. C, I can't really tell what direction C closed. It looks to me like it closed down. I can't really tell. There's no real wick or anything on it. The point I'm trying to make, and don't get lost on whether it's A, B, C, or D. All I'm trying to teach you with this is that these bars are closing up. The selling exhaustion occurred on this bar right here. Selling exhaustion occurred on that bar right there, and these bars are now starting to close up, and you're getting resumption of buying coming into the market right in our opportunity zone of the mid-band to buy it. Everybody see that? Okay, good. All right, now let's skip forward to today, because there's a very important topic that I want to cover about the exception to this at the open the open of the equity markets and news events. So we all know, and we've said this, it bears worth repeating. I'm going to go reconstruct how the market looked at the open and recreate this trade. Now, if you just look at this area right here, the open of the market is actually right here. Right here. It's right here. This is when we're starting to anticipate getting ready to take a trade. What would be your bias? What would be your thought? Would you be thinking long or short in this area right here? L or S? Long or short in this area? If you woke up tomorrow morning and ES looked just like this, what would your thinking be? Look at the background, what the market's doing. You'd probably be thinking long. Right. Now, at market opens, is it possible that markets don't do what we want them to do? Can markets have reversals at opens? Is that possible? Have we ever seen that happen before? What do you think? Yeah, all the time. Now, what's the other thing that we look at when we're considering this? And this is the correlations that I like to talk about. And so what I did, and here's how you can do this, is I put a box on it. I'll show you. In fact, I called these levels out in the room. I said box it in. If it breaks this level or that level, I'm going to get long or short. Now, in this particular case, I was running a little bit late. I had something going on this morning and didn't get all organized like I normally do. I would normally put an object trader box on that and the close outside. But in this case, I simply put right here, I put buy orders in, limit buy orders here to get long. And I put limit sell orders to get short here. Does everybody see why I did that? So it's essentially a box only using limit orders. You can do that. You can absolutely do that. It just means you have to manually manage your trade. So I believe it was 20 and 17.50. So that's precisely what I did right there. That's the opening box right there. That's the opening box right here. See it? Can you see the support and resistance levels? See, I love this indicator right here. When you have support and it stays at a certain level for so long, you get this dashed line. So you put your order right on it or right underneath it. Same up here, the swing level. So on it, right above it, like that. So if it had broken up, we would have gotten long, and our target would have been to get back to the high of the day, right? If we get short, we're going to look to scalp some and then trail the stops. So which way did it go? No, there's no OT. I want to be clear about what I'm showing you right here, okay? These are limit buy sell orders. There's no OT box involved on what I'm explaining to you right now. You could have put an object trader box engulfing these candles with a close outside, long or short, enabling both ways, and it would essentially done the same thing. It would have done exactly the same thing. The only difference is that when you put a buy-sell limit order in, it gets filled when it goes through it. Not the bar doesn't have to close. See, that's the difference. Let me explain the difference here. Let me see if I can explain it like this. So if you have a sell limit order in here, right as this market comes through it, you're filled. So you're short from here. You're short from right here. You're filled short. In the case of an object trader box close outside long or short, you're actually filled short on a close of a bar, which would be right here. Does everybody see that? Do you understand the difference? Everybody understand the difference of those two entries? Everybody clear on the approach there? It really comes down to, if you have time to draw the OT box, it's better to use OT because it's semi-automated and it puts the targets, puts the stops, and manages trail and does everything for you. You don't have to worry about any of that. You just have to move it around. When you do it manually, if you put a 2 or 3 or 4 lot on there, then you've got to put the stops and put the trails and put the targets all in there yourself. I do use regions all the time. I do use. Hey, Maurizio. No, it's not a limit from OT. Here, am I in sim? Yeah, okay, sim. Okay, let's go over here. It's really simple. It's not complicated. Let's do a hypothetical. Let's say I want to buy, and we wouldn't do this because, here, let's do it this way. Let's say I want to buy, let's see, I see an opportunity zone on ES, and if the market retraced anywhere down into here, I want to get long. So you right click and you put a buy order right there, buy limit. That's it. There's no touching, there's no closing, there's no anything more than just if that market comes down, if ES comes down and bips right and touch that market, I will be long right here. Be long on that right there. No matter if it closes up or down, it doesn't matter. I will be long right there on a limit order. So you can do the same thing on a breakup. Let's do it right now. Let's say we wouldn't do this because it's at the top of the range. And your risk return would not be good here because what's your risk return? Well, you might get to here and your stop has to be down here. So you're still in the thrusting part of the move, right? Your stop would have to be down here. So that's not good to do, but what you could do if you wanted to do it, just to experiment, you put a buy stop right here. Now, if that bar closes up, boom, you're long. Yeah, some of you trade that way. So some of you aren't used to trading that way, and it's a pretty simple and straightforward way to trade. If you can learn to use the object trader tools, I think it's stronger, more solid, and better for you. But if you don't know how to use the tools, or if you're in a hurry and you just want to get in, you can use market and limit orders. Okay, that's how that works. So if this closes up here, boom, you're long. If it comes down here and touch that, you're long. Boom, just like that. Okay. Let's finish up this trade, and then we'll be a quick show of hands. What do we want to see next? If we're going to look at 1 or 2 other ones, do you want to see Crude? How many of you trade Crude? Yes, CL, Giuseppe? Taking votes? Yep, a lot of you, some of you want gold. Oh, that's the other thing I was going to tell you. I don't know that I have time to bring this up, but the correlations that we're talking about are, I don't just trade ES in a vacuum. Okay, I just don't sit here and have one ES chart and I'm staring at it and I don't pay attention to what the other markets are doing. So what I'm doing is I am also, when I trade ES, I also look at, and sometimes trade, what the other markets are doing, namely YM, NQ, and the Russell, RTY. Are those going up or down? Right? What are they doing? And then I also look at gold. What's gold doing? Is gold going up or down? Okay, quick pop quiz for those of you that are sticking with us here. If the correlations that we talk about every day are intact, if the and the correlations are working correctly, if the equity markets are heading down like this, then what direction should gold be going? If the equity markets are going down, what direction should gold be going? Now, it doesn't always work 100% of the time. I'd say I'd give it probably 80, 85, 90% of the time. So it's a very high correlation. So the equities are going down. Gold should be going what direction? And the answer is up. Right. So they are normally an inverse mirror relationship from each other. Okay? So in this particular case, if you remember, I said that the market had turned negative. YM was heading down. NASDAQ was tanking. Let me see if I can show a NASDAQ chart at the open. Stand by. Might be able to show that. So out of the four equities, ES, YM, NASDAQ, and Russell, each morning, normally one of them leads the proper direction. So it's not unusual if ES is sitting here on the mid-band that one of them, YM, and I think in this case this morning, YM had already broken and was already dropping. Or it could have been NASDAQ. Hold on. Let me see if I can find that chart. There's so many bars on NASDAQ. I don't know if that's going to work. No, too many bars. Sorry. All right, before we run out of time, let's get a crude oil chart up here. I think it was YM, Byron. I think that's right. I think YM. I don't know if I can show a YM chart here real quick before we go to crude. Stand by. So right, I'm watching all 5 charts. I'm watching all 5 charts plus crude, so 6 charts. You don't have to watch all those. We'll help you. You know, you can put YM and ES and gold up. You know, you can trade crude and gold and ES. You can trade, you know, whatever you want to trade. And we'll help you with that too. I'll tell you what the market's doing. You know, if YM is leading the pack down and has already broken, I will tell you that. And then you can trade it appropriately, and that will reinforce the fact that we were already short on ES, right? Let me go back to the open on Weimer and show you what it was doing. All right, here, let me show you. Yeah, let me show you. Let me go back. I'll show you what I was talking about. Why I was saying YM was leading the pack. Let's look at 630 and 631 on YM. Where was YM at 630? Down here. Right? Where's 630? 630 is always shotgunning these sell bars. Look at all these. Look at this massive selling coming in right here. All of it's selling. Look at all the selling right there. See it? 631 is way over here. So by the time that ES broke, YM was all the way down here. You see that? Everybody see that? As I recall, let me see what gold was doing. Gold, I believe, was just starting. Gary had already called. Excuse me. Gary had already called gold long out of a box, I believe. Anybody remember that? Sure, Alan. Let me come back to that. Now, gold, as I recall, dinked around a little bit, and then eventually it broke up and went up to fresh highs. Everybody remember that? Let me show you that. Remember it dinking around? Just dinking, dawdle, dinking around. Where is it? Where in the heck is gold? No, I'm on the wrong day. Hold on. Sorry, changing these charts is kind of a... Yeah, here we go. So I'm trying to show you the correlations. Right here. Here's gold. When I came in the room, as I recall, Gary had called gold on a deep retracement and had a box drawn down somewhere. And you correct me if you were in there and you remember wrong, different from this. I think he had a box somewhere down here like this. And he had already called along. I didn't get long gold. I didn't get long until the mid-band here when it's set up. See that little box right there? Right around 631, right as we were getting short on ES in the equity markets. As we're shorting the equity markets, YM was already short ahead of the open. Remember the chart you just looked at? What direction is gold going here? Right here. It's up. Went up for like in 45 minutes, all the way up till 7:15. Stopped out of the gold long right here. So when the market correlations are intact, you can trade the markets, you can short the equities and take the longs on gold with some confidence that there will be some follow through within the first hour of trading. Well, no. The trend on gold going into the open mini was long. See over here? See how it get long here? Right here? See it? So he was right. That was a deep retracement. That was not a short. So this would have been like a phantom trade, basically, down here, this deep retracement. I didn't really feel comfortable taking that, so I waited. And when it paused right here, because I was short the equities, that's where I got in. Yeah, so I missed the first leg of it right here. Okay, all right, so that's the correlations. Let's get over to crude. Stand by, please. Let's look at crude. And somebody asked about 5:45 my time, so that was 15 minutes before the crude pit open, Alan, on Crude. Okay, chart's loading. Stand by. Give me a second here. Trying to get today's open up here. Okay, let's see here. Let me see here. Okay, so let's get oriented. Here's crude right here. Yeah, so this would have been, so Gary opened the room, 5:55 would have been right here. So he was just opening the room, like probably somewhere right, like in here. And so the market, right when he was opening the room, would have been down here. I don't know. Did he call Phantom and buy this down here? And anybody remember that was in the room early when he opened it up? How he handled that? Anybody remember? It shotgun quick. It was too quick to do that. Well, where I would have gotten in, I did not take it here because I wasn't in the room at the time. But when the crude pit opened at 6 o'clock, you had a beautiful textbook mid-band box right here. See it? A lot of you weren't in the room. Okay. Most of you know this, of course. Truth be told, I'm not a deep retracement guy. I'm just not. I've never been really good at those. I mean, in order to be successful in any business, you got to know your strengths and weaknesses. He did call that long. He called the mid-band, Byron? Yeah, I could see him calling that. Sure. That's right, the pit opened here at 6 o'clock. So, the room would have been open like 5-10 minutes, and it paused right here for about a couple minutes. So plenty of time to put a box on it. You would have been filled long in here. I didn't actually get in, truth be told, until way up here. See this little pullback here, the minimum criteria entry? That's where I pulled the trigger. So I only got at least the last sort of scrappy tail end of it. That double topped at 12, remember? And pulled back. Yeah. So, that was the entries early. And that was a pretty good run. I mean, you got at $10 a tick. Let's say you didn't get filled till the top of the box here at 55. If you had a loose trail, you got taken out maybe up here somewhere around 59. That's where did I say you got filled? 55-ish. That's around 40, 45 ticks. 5 bones a lot, roughly. Where you got in, how you trailed it. I think I only made the last like 15 or 20 ticks. I mean, you could have gotten out and gotten back in if you had a tighter trail. The re-entry points after that initial entry was right here. See that? See, there's barely a minimum criteria. That was good. Minimum criteria here was good. And then your exit would have been somewhere up in here or here. Well, that's what I was going to say, Mindy. So I think that's so this, what I'm saying is this could have been one continuous trade, or it could have been broken into 2 or 3 different legs, right? Like one here, stop out, re-enter. Leg 2, stop out, re-enter. Leg 3. they would have all been, if you put multiples on here, obviously you know that when you get a pop to the top, you peel and then you engage the trail, right? So you put your targets up here, and then you trail in the second lot or third or fourth lot, whatever gets taken out over there. Okay, Louis, some of you got to take off. I'm going to wrap here in a couple of minutes. Any questions? Any questions on what we've shown here tonight? By the way, this is a part one of part two of a two-part webinar series on this topic. So consider this tonight sort of be more, foundational, laying some good foundation for you to understand what we're talking about. And then Saturday morning at 9 o'clock, I have a part two. I can get into some more detailed information about, quickly spotting the trend, seeing the entries in part two on Saturday morning at 9. Any final questions? I answered that. Are you asking 545? Let's see, 545 was right over here. Over here? Let me answer. It's a good question, David. I'll circle back after I answer Alan's question. Okay, let's go back and Alan's question is asking, how would you have handled crude oil at 545? Well, when 545 came along, I think you'd be looking pretty much for long trades. You'd be looking at long off of here, right here. Get long right there. Now, when it came back into the box, could you have flipped it short? Did you get a scalp off? I don't know if you really got a scalp off. You'd have to have a tight stop on it. When it comes back in the box, most of the time we dump it. Would you have flipped it? Probably not. And the reason I'm saying that is the only way I would consider flipping a market is if it was near the open or at a critical news event like an ISM number or payroll numbers. Are you asking? I don't know that you could have flipped it, and it didn't really look back at all. It went all the way down here to 58.10. If you did flip it, for some reason you engaged your box both ways, were anticipating perhaps another move, and you filled short. That was a beautiful short. Went all the way down to here. Stopped you out here. Let me circle back and answer the question. You missed all of that. Yeah. Well, sometimes you miss them. Sometimes the markets just don't do what you think they're going to do. And sometimes they, that was, I think you're right there, Bill. It looks like about 90 ticks, 50 ticks. If you had the box enabled short, let's say hypothetically you got filled short at 70-ish on that bar right there. If you enabled the shorts, I think given the background colors and the trend, you probably wouldn't have, but if you got lucky and you did, went from 70 all the way to 20-ish. Yeah, so 50 ticks down in like 10 minutes. I mean, you can enable shorts. Now, here's an example where if you put a short on it, it didn't work out. And so just for some reason overnight, me personally, if you're in a trend, I don't start enabling either ways. At 6:30 or 6:01 or at 7 a.m. or it might be a market top or bottom, you can start looking at that. But here's an example where if you enabled long short on a box right here, it would have bipped you short and then stopped you out, and you'd have to flip it long. So there's an example where one didn't work. So it's risky unless you're in an open. Let me talk about trails real quick. I'm going to talk about it on crude and circle back on ES on the trails. There was a question regarding looseness and tightness and where you move accordingly. Stand by. I'll do crude first, and then I'll switch back to the ES chart and talk about that topic, because it's a very good topic. It's an important topic. It's almost one, I would, and I'm not trying to be kind of spooky or evasive anything about it, but you know, trail stops are almost part art, part science. It's almost like a right brain, left brain thing, and a lot of it has to do with the instrument you're trading, the depth of the retracements of the instruments you're trading, and your ability to get in and out on the volatility that you're watching. This is a case where, and you have to know the distance that your market tends to move before it has retracements. So let me just explain what I'm talking about. Okay, so here again, you're filled long at 55. Now, when crude gets all the way up here to 85, it's moved how far from your entry? Approximately 30 ticks. So is there going to be some profit taking up here after 30 ticks? Probably. How deep is it going to go? Well, we don't know. Sometimes on this big push up, it was respecting stealth in line 6. However, the wicks of these bars broke it. So the only way to do it is to get out and then get back in which case you would have been filled probably on out of a box, re-entry, or limit order on that bar right there. Now, with speaking to the issue of tightness of stops, in other words, when do you go to a tight mode versus loose? Here again, you're entering at 55. I'm going to close this bar right here, long. And by the time you get up to 12, how far? 11, 10, how far have you gone? How far is that from here to here? Yeah, almost 60 ticks. Let me ask you this question. When any market has gone 50, 60, 70, maybe even 80 ticks in the case of NASDAQ, what is the likelihood that a retracement, a deep retracement, is going to occur? Profit taking. 50, 60, 70 plus tick moves. What is the likelihood that a large profit taking, whether it's short covering down at the bottom or it's profit taking at the top? What would you say? Is that high, highly likely, or not, less likely? Highly likely. So think about it sort of intuitively as you look at this and ponder your problem. When a market has only gone up, in this case, let's say for instance you got a little quick scalp out here at 10 or 12 ticks. You know, you can pull your stop up, your initial stops, to 2 or 3 ticks behind your entry. We always talk about that, right? So your initial stop is 12, maybe on a 2 lot. You got your scalp off right up here somewhere, 10, 12 ticks. So you got 1, you're down to 1. You take that second contract, you come up within 2 or 3 ticks from your entry, and then you keep it loose. If you keep it loose behind stealth and line 6, you ride it. Now when you get up here and you've been up 60 ticks, do you think you want to leave it loose after the market's run 60 plus ticks? Do you want to keep leaving that trail loose? What do you think? What do you do with that pup? In fact, I think I called this out, as I recall, because I got in late, and I think Gary had already stopped out. Yeah, you tighten it. This is where you tighten it. After the big move is made, you crank it up. You crank it up nice and tight. You don't give all this back. Don't let it come way down into here. Don't do that. Let me show ES. ES is another good example of yeah, we're not talking about gold at 6, Mindy. As I recall, I think we were looking at what gold was doing at 630, 631, 632, because that's when the ES and all. In fact, I think I showed you that YM had already been selling off precipitously, going into 630, 631. Well, she was the little leader today. And then I have to tell you, as I recall, I think NASDAQ was tanking and Russell started to break, and ES was last, and that's when gold started moving up. All right, let me get that ES back up at the open, and I want to discuss trail stops on that real quick, and then we'll wrap this up. Stand by, it's loading. Okay. Where are we at here? Okay. All right, here we go. What was I going to show? Oh, the trails. Yeah. Okay, let me get some of this stuff off of here so I don't get all people all confused about stuff. Let me blow this up. So I want to show you something really important, and then we'll turn this recorder off. So as you recall, I had a limit sell order right here, and this is where I was filled short. So when this market did this move here, it went from here to here. It went from 1750 all the way down to 14. How many ticks is that? How many ticks is 1750 all the way down to 13.3? Well, I actually got down to 1350. 1750 to 1350. 4 points or 16 ticks. 4 points or 16 ticks. So do we get our 8 or 10 ticks scalp? Did we get a scalp there? Your 12 tick initial stop was up here. 1750 plus 12 is 3. That'd be 2050. So yeah, it'd be right up here. This would be your initial stops. So you're filled short here. Your scalp came off. And now what do you do with the trails? What do you do with the trails? We always tell you what, 2, 3, 4 ticks behind your entry. Why do we tell you that? Why do we always say don't put it right where you got in or slightly below it in the case of the short? Why do we always say go 2, 3 ticks above it? Well, it's because this right here. A lot of markets do this all the time. This is the ABC. Here's the A, here's the B, wicked right where we got in, and then rolled over and back down she goes. So you can see here that in the case of ES and other markets, that if you get too aggressive on your initial stop and then you engage the trail too quickly, you could have quite possibly been bipped out of this trade right here and then had to re-enter. Same thing happened over here. So, you were filled short at 6:30, right, just a few seconds after the open. And then basically the first 10, 15 minutes, you had to keep it real loose. You had to keep that real loose above that swing. See it? So you have to keep it loose. Now, when it started to move in your favor, it stayed underneath stealth in line 6, and by the time you got down here, you already dropped 14 handles. 14 handles on ES is 56 ticks. After ES has moved 56 ticks, do you think you want to be tight or loose on the stops? So we're trailing while you're thinking about that. We're trailing. We're keeping it a little bit loose. It's coming down. It's moving in our favor. Now, when it gets down here, 56 ticks on ES, do you want to put it like here, or should you put it like way up here at final contracts? Where's your trail going to go? Tight or loose? How much do you want to give back? Tight would be like at 0550. Loose would be all the way up here at 07. Extremely tight. 56 ticks on ES is a huge move down. Huge move down. So you want to totally crank that pup down. As I recall, when ES was finally breaking the lows right here, YM had already broken it way back over here. NASDAQ was ripping through the bottom, and Russell was just tanking like a dog. So we knew, what is that telling you? And gold, you saw what gold was doing, right? Gold pushed and broke the highs. We knew this was going to happen, and it did. Now, after all this accelerated selling and all these contracts, all these sell programs pumping out sell orders like this, what happens over here? That's the apex of the sell right there. Apex is the peak. Apex means the peak. What starts to happen over here? What is all this? What's the predominant colors of the bars? Are they up or down bars inside of the second rectangle? Well, they're blue. What does blue mean on up-down? Volume. Short covering. That's right. Buy to cover. Buy to cover. All the big market participants and the banks and the algos and all the traders all over the world that trade ES, and trust me, there are 1.5 million contracts a day. It's the most liquid, highest volume futures instrument in the world. ES is. I mean, look at these bars. They're huge. These two alone were 12,000 contracts. 12,000 contracts. Think about that. That's a lot of contracts. Yeah, this is all buy to cover. All the market participants who were short from way up at higher levels, wherever they got in, right? All these huge, massive. This one right here. This is 10,000 sell contracts. Here's another 8,000 right here. Here's another 6,000 over here. 7,500. Probably 50,000 sell contracts or more coming through in the span of 6:37 all the way over to whether this massive buy to cover comes in here at 7:18. So what is that? A half an hour? No, it's more than that. 45 minutes? 7:12. Yeah, half an hour, 40 minutes of just massive sell programs selling. Yeah, you think that's some big accounts? That's the big boys. That's Barclays. That's Goldman Sachs. That's huge banks all over the world spend millions of dollars on software, AI, and machine learning development in teams that are distributed around the world, and they share the code 24/7. Everybody knows that, right? I explained that before. You have teams writing code, AI and machine learning code in England, and then, you know, as it moves into around the world, they share their code and they update it and they run their scripts. I saw something the other day that showed Citadel. Anybody know who Citadel is? In fact, I'm just going to stop the recording. I think